May 2026 is here, and the stock market just had one of its biggest earnings weeks of the entire year. Amazon crushed estimates, Microsoft Azure grew by 40%, Meta is printing money, and NVIDIA is sitting near all-time highs. So the question every investor is asking right now is, which stocks should I actually buy in May 2026? I spent hours digging through Wall Street analyst reports, live earnings calls, price targets, and market data, so you don't have to. In this video, I'm giving you the 5 best stocks to buy right now, their exact current prices, why they're a buy, what analysts project for the future, and a crisp market analysis of each one. Let's get into it. Before we jump into the picks, quick context. As of April 30, 2026, the S&P 500 is sitting around $7,136. The NASDAQ is at $24,673. Big Tech just reported earnings and they beat across the board. AI capital expenditure across just 4 tech giants is projected at $600 billion in 2026 alone. This is the backdrop. Now let's talk about the 5 stocks best positioned to benefit. Stock number 1, NVIDIA. Current price is around $209 per share as of April 30, 2026. Number 1 on our list, and honestly this one should surprise nobody, is NVIDIA. NVDA is currently trading at around $209 per share, just off its all-time high of $216, with a market cap of over $5.1 trillion. That's not a typo. Why buy it now? NVIDIA's next earnings is on May 20th, and Wall Street is expecting big things. Last quarter, the company delivered EPS of $1.62, beating estimates of $1.54 by over 5%. The next quarter is estimated at $1.74 EPS. Revenue growth has been running at over 60% year over year, and the company's EBITDA margin is a stunning 61.7%. Here's the big picture. NVIDIA dominates AI infrastructure. Its H100 and Blackwell GPUs are the backbone of every major AI data center on the planet. Demand is not slowing down, it's accelerating. Market analysis. NVIDIA is trading above every key moving average on both daily and weekly charts. It's technically strong. The stock is up nearly 90% in the past 12 months. The beta is 1.65, meaning it's volatile, but that volatility has been to the upside. Analyst consensus. 57 out of 60 Wall Street analysts rate NVDA a buy. The average 12-month price target is $267, which represents roughly 28% upside from today's price. In an optimistic scenario, the stock could hit $247 to $270 in the next year. Future prospects. By 2030, NVIDIA itself projects $3 to $4 trillion in annual global data center spending, and NVIDIA has positioned itself as the company that sells the picks and shovels to every player in that gold rush. Software, robotics, autonomous vehicles, it's all coming. This is not just an AI stock. NVIDIA is becoming an AI infrastructure platform. Don't sleep on it. Stock number 2 is Amazon. And after last night's earnings, this is the most exciting it's been in months. Amazon just reported Q1 2026 results, and they absolutely demolished estimates. EPS came in at $2.78 versus expectations of just $1.64. That's a 70% beat. Revenue hit $181.5 billion against the $177.3 billion Wall Street expected. But the real story is AWS, Amazon Web Services. AWS grew 28% year over year to $37.6 billion in quarterly revenue, its fastest growth in more than 3 years. Wall Street had expected 26%. And advertising revenue hit $17.24 billion, also beating estimates. Why buy it now? Amazon is firing on all cylinders. AWS is the cash engine. Retail margins are improving. Advertising is growing, and the company has committed to $200 billion in capital expenditure in 2026, almost entirely aimed at AI infrastructure. That's a massive bet, and early returns suggest it's paying off. Market analysis. AMZN has risen roughly 30% in the past 2 months, recovering sharply from a February low. It hit a new all-time high of $265.91 just this week. Volume is elevated, momentum is bullish, and technically it's in breakout territory. The GF score, which measures long-term potential, is rated 93 out of 100. Future prospects. AWS is the bloodline of global AI infrastructure. Every startup, every enterprise, every government agency is moving to the cloud. Amazon also just acquired Globalstar for $11.6 billion to build out satellite connectivity. Robo-taxis with Zoox, AI agents with Bedrock, the upside here is enormous. Analysts have Amazon rated as a strong buy, with the stock still trading at reasonable multiples relative to its growth rate. This is a core holding from May 2026. Stock number 3 is Microsoft, the quiet giant that just keeps delivering. MSFT is trading around $418 right now. It's down from its 52-week high of $555, which means you are getting this company at a 25% discount from peak pricing. Why does that matter? Because Microsoft just delivered another earnings beat. Q3 fiscal 2026 revenue came in at $82.9 billion above estimates. And here's the headline number. Azure Cloud grew 40%, beating the company's own guidance. That's the fastest Azure growth in years, and it directly validates Microsoft's massive AI infrastructure buildout. Why buy it now? Microsoft is the AI company that's already monetizing. GitHub Copilot has millions of enterprise users. Azure is the second largest cloud platform in the world and accelerating. The company's partnership with OpenAI gives it exclusive access to GPT-4 and future models at scale. And Copilot is now embedded across Microsoft 365, Word, Excel, Teams, products used by over 1 billion people. Morgan Stanley analyst Keith Weiss has a buy rating with a $650 price target, representing over 55% upside from current levels. Market analysis. MSFT is technically constructive. It's up over 20% in the past month, trading above its key moving averages, and the earnings reaction was muted, meaning the stock didn't spike dangerously on the news. This is a healthier entry point than peak pricing. Future prospects. Microsoft's commercial cloud business is on track to exceed $300 billion annually. The AI CapEx buildout, nearly $190 billion in 2026, is being used to build the infrastructure that powers the next decade of enterprise software. When those models and services start monetizing fully, earnings growth will accelerate dramatically. At $418, you're buying Microsoft at a discount. This one is a no-brainer. Stock number 4 might be the most under-the-radar pick on this list, but it absolutely should not be. Broadcom, ticker AVGO, is currently trading at around $405 per share with a market cap of $1.92 trillion. Here's what most retail investors don't fully appreciate. Broadcom is not just a chip company, it's the custom silicon king of the AI era. Google, Meta, Apple, they all use Broadcom to build their proprietary AI chips, and that business is exploding. Why buy it now? Broadcom just hit a $2 trillion market cap after Google unveiled new AI chips built on Broadcom architecture at Google Cloud Next on April 22nd. The stock surged nearly 45% since the start of March alone. In 2026, Broadcom reported 24% revenue growth in AI semiconductors, and that number is being revised upward. Bank of America's analyst Vivek Arya specifically named Broadcom as a top pick to benefit from the global chip sector crossing $1 trillion in annual sales for the first time in 2026, a 30% year-over-year surge. Goldman Sachs has a $450 price target on AVGO. The average analyst price target is $443 to $475, with 44 out of 44 analysts surveyed rating it a strong buy. Market analysis. AVGO's 52-week range is $184 to $429. The stock has more than doubled in a year. It's technically in a strong uptrend, though it pulled back slightly from its highs, which is actually creating a better entry. The PE might look elevated, but the earnings growth justifies it. Future prospects? Broadcom itself has reportedly targeted $100 billion in AI chip revenue by 2027. Custom silicon is the future of AI infrastructure as hyperscalers like Google, Meta, and Amazon reduce dependency on standard GPUs and build their own. Broadcom is the company helping all of them do that. It wins no matter who wins the AI arms race. And stock number 5 is Meta Platforms. And despite some near-term noise today, this is still one of the most compelling stocks heading into May. Meta is currently trading around $622, down about 5 to 6% today after reporting Q1 earnings, where the company raised its 2026 CapEx guidance to $125 to $145 billion. Wall Street got spooked by the spending, but here's the thing, the underlying business is incredible. Q1 2026 numbers. Revenue, $56.31 billion, a massive beat. Net income, $26.77 billion. Ad revenue growth, 24% year-over-year. Q2 2026 revenue guidance, $58 to $61 billion, above consensus. Why buy it now? Today's dip is an opportunity. Meta's core business, advertising across Facebook, Instagram, WhatsApp, and Threads, is the most profitable advertising machine on the planet. AI is making Meta's ad targeting dramatically more effective, and that's directly showing up in revenue. The company has 3+ billion daily active users across its family of apps. There is no other advertising platform with that kind of reach. And CEO Mark Zuckerberg is aggressively investing in AI. Meta's Llama models are now one of the most widely deployed open-source AI systems in the world. Market analysis? Meta's 52-week range is $520 to $796. At $622, you're buying it at a significant discount to its recent highs. The dip today is driven by CapEx concern, not fundamental weakness. The earnings beat was real. Revenue is surging. This is a classic sell the news overreaction. Future prospects? Meta's AI investments in recommendation algorithms, ad targeting, Llama models, and the metaverse, Reality Labs, position it as both a dominant near-term cash machine and a long-term AI platform company. Analysts maintain strong buy ratings, and the stock has room to recover to and beyond its $796 high. If you've been waiting for a Meta entry point, today might be it. So there you have it, 5 companies, all AI-era leaders, all reporting strong or beat and raise earnings, all with major analyst tailwinds behind them. Let me give you the one-sentence thesis for each. NVIDIA, the GPU monopoly powering every AI data center on Earth. Amazon, AWS is accelerating and the company beat estimates by 70% on EPS. Microsoft, Azure at 40% growth, trading 25% off its highs. It's on sale. Broadcom, the custom chip backbone of Google, Meta, and Apple's AI ambitions. And Meta, best advertising machine in the world, dipping on CapEx fear, not weakness. Now, important note before you do anything. This is not financial advice. Always do your own research, understand your own risk tolerance, and consider speaking with a financial advisor before making any investment decisions. Stocks go up and down. Past performance does not guarantee future results. But based on everything I've analyzed, earnings, analyst ratings, market trends, price targets, and current valuations, these 5 stocks represent some of the most compelling opportunities in the U.S. market heading into May 2026. If you found this video useful, smash that like button, subscribe for weekly market breakdowns, and drop a comment telling me which of these 5 stocks you'd actually buy. I'll see you in the next one.